Andrew, good morning. Thanks so much for joining in.
It's a pleasure.
World Bank cutting China GDP data by 20 bips. Is it really an eye-popper or is it par for the course?
Not at all. I'm afraid I tend to ignore completely both the IMF and the World Trade Organization forecasts, not because they are not important, but because they are not really market movers. IMF has been consistently wrong on a number of things, as has been quite a lot of people, including myself. So yeah, I look at it and I just simply pass it by. Okay. So it's neither an eye-popper nor of anything that will really move the markets. Markets get to be moved when they have purchases managers indexes, when we have industrial output, when we have inflation, but actually GDP cut by 20 basis points for the next year, frankly, who cares?
Andrew, what is it that you've made of the September non-farm payrolls data, which has been the worst reading in 2015 for US? Is it now an assumption that at least in 2015 there's not going to be a Fed liftoff if Fed indeed is going by data?
Well, actually, I'm afraid I have to use the word I now. Okay, for a year now I've been saying the Fed is not going to increase interest rates during this year. It will increase them next year, possibly as late as Easter, possibly as early as the end of the first quarter. Hence, the labor data simply adds to the argument, but I don't think they are crucial into that. Labor data in the States tend to be very volatile. We already had a significant revision in the September data when we're looking at, at the August-September data when we're looking at the October releases. So, you know, this is very much par for the course. Yes, it doesn't help. What does help enormously is the realization by the Fed that any increases in interest rates could be not only domestically counterproductive, but also externally, globally counterproductive. The Fed doesn't care what happens to the European Union or to Japan. The Fed only cares what happens to the United States. But if they do something in the United States that will blow back via a global reaction to the United States, oh, they do care a great deal. So that's why the Fed now is taking very close attention to what is happening globally, and therefore they say, well, the global situation is such that an increase in interest rates would have been bad. They are not saying it would have been bad for the global market, it would have been bad for the United States market. Case rests. They are not raising interest rates till year 16.
Irrespective of what Fed does and when it does, in the short term, do you think there is a risk of outflows for emerging markets? Frankly, the reason why outflows have started is not because what Fed would do, it's largely because there is a global growth concern.
True. In fact, if one looks at the figures of the Institute of the IFF, then yes, there has been a significant outflow. But I must admit, I take this with a huge pinch of salt because I want to know these guys and girls sold off, let's say, Indian shares or Chinese shares or Korean shares. What did they do with their money? Clearly, it didn't quite go into the equities of the European Union, of Japan or United States, because they had the worst performance in a quarter for I don't know how many years. So it's all very nicely to say money's coming out of the emerging markets, but nobody says what is happening, where is that going, unless of course it's going straight forward into cash. But the answer is yes, this doesn't help. But, and that's a huge but that nobody talks about, the Chinese market that apparently caused it all by collapsing during June and July is a closed market. The amount of money that goes from outside is a tiny percentage of the total capitalization. My best estimate is about 6 to 7% of the capitalization of the Chinese market. And if that is few billion US, really an outflow means absolutely nothing as far as China is concerned, because foreign capital plays a very, very small role into what is happening in that market. It is the domestic market that matters. So if somebody tells me, look, a lot of money is coming out of emerging markets, and I say, and which is the most important emerging market as far as sentiment is concerned, and they tell me China, I say, then I pay no attention whatsoever to the outflow because the Chinese market is a closed market. So outflow or not outflow, any outflow out of the Chinese market from the permitted amount which is invested, the authorized amount, it is a very, very small percentage of the total. End of story.
Andrew, final question, at least from my end. What's the view on India? A lot of talk about how the macro data seems to be improving at the fringe. Do you buy that?
Yeah, no, I'm afraid I don't. There were two things here. First, I was pleasantly surprised by the RBI cutting by as much as 50. That is always supportive, always reflects, of course, what is happening to inflation. If I look at the macro data, it's a mess. I'm sorry, it's not a mess, it's a mismatch. Exports and imports continue to shrink, and if imports are shrinking, that's never a very good idea, although part of it might be the drop in the price of oil, which is reflected back to the fact that oil inputs is the single most important component in India's import. Then if I look at industrial output, up and down, if I look at purchases managers index, it sort of moved up, then it moved down, and therefore it's flat. And then when I look at the Modi's marketing tour, okay, across the United States, all I heard is how good things could be in India. Nobody said anything about the fact that the Indian Congress promptly threw out cum laude the attempt to reform the land market, hugely important both for agricultural development as well as industrial development, and throughout cum laude the unification of the sales tax. Now, whether India puts a satellite on Mars leaves me totally unconcerned and unimpressed. What I want is macroeconomics, they're okay. What I want is monetary policy, that's good. And when I want a policy outlook, which is effectively zero. Okay, there's nothing in the horizon to induce some sex and violence in the market, so to speak.
Andrew, good chatting with you. Thanks so much for taking the time out as always.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.